Let's move on now and let's welcome on board the management of KEC International. We have the MD and CEO Vimal Kejriwal joining in the show right now. Vimal, hi, morning. Good to have you on the show. What's been the impact with the opening of the lockdown now on the T&D business? And are you seeing business momentum, and has that really been meaningful?
So to me, I think the lockdown impact is slowly going away. Today, we are back almost on the same strength as we were before. We had 30,000 workers before the lockdown, which had come down to 15 in the, at the start of the lockdown. And now we are back at almost 29, 30,000. So in terms of labor, I think we are back to the normal strength. However, because of sporadic localized issues, etc., work is still not back to, I'll say, 100% efficiency, maybe 80, 90%. So if you look at revenues, I think April was the month which was impacted severely by on account of the lockdown. But later on month, I think we have been doing generally okay, almost on par or better than last year. So I think on operation side, we are back. Factories are running well and no major issues. If you look at the order book, we have announced order intake of almost 3,333 crores in the last few months, which is actually 70% more than the previous year, but we would have loved to have more. The good part is almost 80% of this is of T&D, and not only T&D, and 50% of this is international. So I think overall, I think the T&D market seems to be picking up.
Sure. What orders are you currently L1 in, and what's the kind of outlook that you could give us for your order book growth?
So if you look at our overall order book, we are at 20,000 crore today unexecuted order book, and roughly around 4,000 crores of L1. If you look at the L1, largely 80% is again T&D and international, most of it. So that is one part of it. As far as the tenders are concerned, we have in the last few months quoted tenders of almost 30,000 crores, and we are quoting another 35,000 in the next 3 months. So overall, around 65,000 crores of tenders being quoted or have been quoted, of which roughly 40,000 crores would be on the T&D account, 10,000 railways, and 15,000 would be civil and other businesses. So I think the tender pipeline is pretty strong. However, we are seeing a little bit of a lag in the order issuance. So opening of tenders, issuance of orders. So I think we are just waiting for the orders to start flowing. All the tenders are flowing in.
Okay, seeing a lag in order issuance, but the tenders are floating in. I just wanted to get an assessment over the last few months as things have gradually been opening up. Mr. Kejriwal, are projects that were earlier being deferred or cancelled now coming back on track?
So what we had seen was that the tendering had been deferred from Q1 to Q2. So most of the tenders are back in Q2. However, if you look at the civil industrial piece, we are not seeing too many projects coming back for tendering on the industrial side, except for a few cement projects. So industrial is where we are seeing a problem. However, on the residential side, we are seeing that quite a few projects which had been, let's say, put in cold storage, especially in cities like Pune and Bangalore. That's where the projects have come back for bidding.
You're ordering traction from overseas, particularly the Middle East and Africa for the T&D segment?
So Middle East surprisingly is looking very, very robust. We have got a large order in Oman. We have bid for quite a few projects in UAE as well as in Oman and Saudi, and some pieces of what we call North Africa as part of MENA, so Morocco, etc. So notwithstanding what is happening with the crude pricing, we're clearly seeing a huge traction in the T&D tender pipeline and ordering in Middle East. Africa, I think it's more on the West African side. And one more country which I would like to add here is Bangladesh. Bangladesh has been a very strong market for us the last 2-3 years. And even in the current year, we are seeing large number of tenders which are multilateral funded coming out of Bangladesh.
Do you think margins can revive? What's your outlook there?
On the margins, I think we are doing, reasonably well. On Q1, we had a 8.8% margin because of the COVID impact. So I think we'll have to wait and watch. I don't see a major impact on the margins except, how does our negotiation with all our clients go on the COVID cost, etc. However, one more point which I would like to bring out here is that the interest costs have come down. So a large part of the margin impact, if any, would get offset by the reduction in the interest costs and tax rates.
All right. Analysts have also raised earnings estimates for FY22 on, the estimated recovery and execution. Any kind of growth numbers that you're working on revenue and profits?
So right now we are not giving out any growth numbers, but I think the way execution is happening and with an order book plus L1 of 24,000, I think we are pretty certain that this year we should be able to match at least last year. And next year, clearly, every year we have been growing by 10 to 15%. So that growth on the current year would definitely be there next year.
In terms of new areas of growth, railways, civil, any kind of activity that you can share with us and what it's looking like on those fronts?
So in the civil, we announced 2 new orders. One was on the warehousing space. So this is an area where we are seeing action happening now. Tenders are coming out because I think because of the pandemic, there is a talk that there will be a lot of aggregation and warehousing will become a more important space. So warehousing is one area where we have got an order and we have got a lot of inquiries coming out of it. The second one is, I think, FGDs, which are a mandate of Supreme Court for all the power plants. Those have started getting built. So we already have one order for the civil of an FGD. So I think these are 2 areas. And the third one, we are now seeing actions on the oil and gas front. So on the refineries, on the petrochemicals, so pipelines and other areas. So we have bid for a few oil and gas pipelines and also drinking water pipelines. So to us, I think pipelines will be a critical piece apart from oil and gas and warehousing.
Vimal, good to have you on the show. Thank you so much for taking the time out and speaking with us. That's the outlook coming in from KEC International. But as you can see on your screens, BPCL, that's the stock currently in focus. The government, it seems, has extended the bid submission deadline to November 16. Ruchi Bhatia, my colleague, joins in with more details. Ruchi, the expression of interest deadline in the disinvestment already extended.